STF Forex Abia, and today we'll be dealing with, in our new class, we'll be discussing about the VIX.com volatility indices. In our previous classes, what we've been discussing is simply the structure of the market, the candlestick patterns, and we started with the basics. So today we continue with a different type of trading assets apart from currencies. So today we'll be dealing with derivative.com, VIX indices. We know about so many about volatility indices, especially from the Chicago Board of Exchanges. This way, especially know about S&P 500. This is the most common one. And this VIX index, most of the time it will check on the fear of traders, like what is happening currently in the US. When the panic mode, or when it moves up and hits like a price between 21 or 28, it hits the panic mode. So the CBOE volatility index, what it actually does is that when it's moving up, it will check on the fears of traders, like what has happened in the currencies market. You can check what is happening in the forex market. The market is kind of crashing down, and they have been having a massive sell-off because most of the traders, they are worried, almost including most of the investors, they are worried that actually the US market may crash down. In fact, we are at one of the best timings whereby you can go to explain this. One of the other one is like the Japanese Nikkei, or what we call the Japanese index. Like yesterday, you can check it hand like for the last 1, 2, 3, 4 days, it has dropped with over 30%. Yesterday alone, we had over 12% drop. You can check at this point. Then moved up today to about 10 to 12%. Now it's back down. We are at the negative territory once again because like that fear is still there and the massive sell-off is still there, including all the currencies. Like one of the examples we can have is like the yen crosses. In yen cross, we have like an example is like the Euro JPY. Everything is dropping down. This one, you can only be able to check that based on the CBOE index. So this is what we did with the volatility. So it will check on that fear or the fear gauge. So the more the movement, like you can check here, the more dramatic the price swings in that instrument, especially when you are selling, the higher the level of volatility. But when you are dealing with the volatility index, or what we mean the derivative.com volatility index, this is another border class of simulated markets, and they contain volatility indices, and they keep on, others keep on coming, others keep on going. So we have like an example like in this PDF, which again I had updated a few months ago. We had 8 types. Like you can check, we have like volatility indices, we have crash and boom indices, we have step indices, jump indices, and others are like red break. We have others like derived indices and basket indices. If you go actually to their trading platform, what you get here is not only that. If you go to view, then you come under symbols. Let's go to that part so that you can go to check what we have there. Just a moment. Yeah, under symbols. If you come to this part, this is all we are having right now. From volatility indices, and if you check here, they are in many numbers. Like you can check here, you have from 25, 50, they are just different assets with different names. And another case thing is like crash and boom, all coming the way down. You can check even you have another additions like drift switching indices. In fact, this one is new to me. Multi-step 2 index, multi-step 4 index. In fact, this one is new. I've never seen this one. We have another basket indices, derived indices. There are so many. In fact, they've added even cryptos. But the key thing is, especially the most common ones, and the most traded one is volatility indices, crash and boom, step, rate, jump. Up to this point. The others, it requires that actually you do your own due diligence before going into them. And one of the key things you check is the minimum volume that you're supposed to use. So the risk factor, the spread factor, and actually the requirement or the equity requirement of your in your account, because they are actually different. This one will be covering in just a few forms. But how do they operate? What are these VIX indices compared to currencies? One of the key things you know about currencies is that for this market to be moving, like you can check here, for any forex market, for these numbers to change, if it is GBP USD, Euro USD, all these numbers are generated from any bank that is opened anywhere. So this is where they derive their price from. But when it comes to VIX indices or to derivative.com VIX indices, and what you should actually know is that these synthetic indices, like this one is an email from derivative.com indices. It says that our synthetic indices are based on a cryptographically secure random number generator, audited for fairness by an independent third party. That means these are numbers that actually generated by what is happening to the AI currently. It can be AI generated or under a computer program. But one of the key things you need to appreciate is that it is secure random number generator audited for fairness by an independent third party. And actually, if you check on their website, they do also have a regulator, because this is how derivative.com index will look like. If you come here and down, you check they have 3 regulators, and they are regulated. It's a regulated market, and actually by the fact that the numbers are being generated by a third party, that means you may have high confidence in this market. So that is the main difference you may find in this market. And actually you can check under even here, according to derivative.com, the random numbers are generated by a computer program, but for transparency issues, derivative.com is unable to influence or predict which numbers will be generated due to broker regulations. Thus, derivative.com can't cheat the market. So because it's a third party, then they have a regulator. So that is key case. Then another case you need to have about this market is the price must mimic the actual price of this market. If I'm taking an example like Euro JPY, I should be able to see an actual structure of the market that is actually making new highs after every retracement or profit taking. So I should be able to see an uptrend with a retracement. I should be able to see a downtrend making lower lows with lower highs, or these consolidation areas. That's the same case I should be able to see that. Then another key thing I should be able to see is the ranging of the market. When the market has no actual direction, the market is in a range. And if you can check like this, that one was from Euro JPY. If I come to it, any chart like ZDD JPY, talk of anything, even if we hit any random trade here, you can check. You have this downtrend making lower lows, lower highs in consolidation areas. Then you can check you have this arranging market here. And then after this consolidation, the market changes and makes new highs and higher lows. That means forms an uptrend like in this Euro GBP. Now let's go to derivative.com and compare the same. Can I be able to see that market structure again on this part? Yes, I can be able to see that. And if you check on this market, even if I hit any trade, I should be able to see that. Like you can check here, this is crash 300. One of the key things you should be able to check here, you can check you have a ring downtrend that is coming here, then an uptrend making new highs and higher lows. That means then you can be able to see this consolidation. So that tells you, even when it comes to candlestick patterns and everything, it is mimicking the actual market. That tells you this is a true market of which you can trade. And one of the main advantage about this market, it's not like what we had like on last Friday. If you go to Forex Factory, if you check like on this market, let's go to last week, so that you can be able to see one of the key element and one of the main advantages of derivative.com over currencies. One of the key things you should notice that since they are being generated, these numbers are cryptographically being generated by a computer program and a third party with a regulation, they will barely be affected by anything we call as what you call the economic release of the market or any news release that is coming, that like you can check on last Friday under currencies, we had the non-farm payrolls. These are job numbers from cashiers from the US Department of Labor. What do you get here? You can check like they are all in red. So if you go to something like currencies, and one of the notorious one is like Euro USD, if you check on such a market, you can check like this one was on Friday. After that, you can check like Euro USD did move up a whooping 139 pips. Like for the whole of this year, I think it was only in March maybe you could have gotten that like under this candle. So this is one of the main advantage of derivative.com, that they only follow, you only need to know about the technical analysis of the market, the structure, the candlestick, then part of risk management, and you are good to go with this market. So it becomes one of the easiest because you don't have to keep on checking which news are coming out. So nothing will affect the market. So it will move in a good structural way. So especially if you are a trader, it's one of the best because you'll be able to move very well technically. That's all you need. So that is one of the key advantage of a currencies. So apart from that, another key thing you need to know about deriv.com is that apart from that, then the next key thing is what is about their risk management, because this is now the main, the only disadvantage you have, and how do you go about that? The only main disadvantage you have with this market is one, and is that this market, if you check under currencies, the minimum volume all the time will be 0.01, especially for the majors, the end process, miners, exotics, gold, and almost all the commodities. Only a few like Brent and maybe some CFDs like stocks and all that. CFDs and indices like FTSE 100 or S&P 500, US Tech or Nasdaq. Sometimes some brokerage firms you may find like in IC market, the minimum volume is 1.0 or the full lot. But under this part, all the others, they will be starting at a 0.01. So when it comes to deriv.com or these indices, you'll find that they start from different volumes. And this is whereby now you need to be very key. And that's why you have this column under this PDF. If you check here, if you check under volatility indices, like VIX 10, the minimum volume is here 0.3. The last time I updated this PDF. If you check like VIX 75, the minimum volume is 0.001. So in an example whereby if like under currencies, even if you start with 0.01, you're already trading 10 times the minimum volume for VIX 75. If you go to other cases like VIX 151S, you can check it is at 0.005. Cases like boom and crash indices, you can check like crash 300 index, the minimum volume here is 0.5, crash 500 is 0.2. Other differences are this trading asset that you may have is like jump 75 and rage break 100 and 200 and jump and rage break, the minimum volume is 0.01. So here you don't have a problem. But the key thing, the more you trade, the more you familiarize yourself with these volumes. But the key thing you do is always make sure when you go to the deriv.com indices, before you do anything, make sure you check the minimum volume. And by doing that, what you're supposed to do here, you're supposed to be coming at a new order, start from 0. Like an example, if I may demonstrate under currencies, if I'm putting it at 000, you'll see that the sell and the buy button, they are not activated. So what do? You start by moving that up. Like I go to 0.01, it is still not yet active. What if I go to 0.01? It becomes active. That tells you that the minimum volume. You should be able to do the same under the deriv.com indices. And it is the only way you can do it. Then you write them down. But the more you trade, the more you become used to these minimum volumes and which one are you supposed to do. So the more you become familiar with them, the more you trade with them. The other good, the best case, if you come to their website, you just go to www.derib.com, this is their website. And if you go to them, this is how the website looks like. So this is where you have your real account, their total asset and all that. But this is where again you should come at this point. You can check like this is a live account. This way if you, so when you deposit your money, they come under here or under this point here. But once again, when you deposit, you can decide now to transfer to your MT5, just as the same thing as we do, because this one we use MT5 instead of the MT4. If I want to download the MT5, I'll just come here to the rig.com trader under this website here, and I've explained this here and on our PDF in details. If you come here at the bottom, you'll find that this is the link. Then at that point, their website, you register for an account. It's so easy to do that. Then you come to this real one. Now you just come here to deriv.com trader, deriv trader. You click that point. When you click that, it's so simple that you come and register for an account, and then you just download the MT5. On the website, everything is there. www.deriv.com. You register for a live account or a demo account. If you go to the website, if you need to change from live, you come here under Traders app, you go to the demo account, you'll be able to see that. This is how the demo account looks like. And then when you come to the.com trader, you can check everything now has changed. You can top up here, and then you start doing your trading as simple as that. So that's how you do. What about when it comes to deposits and withdrawals? The simple thing is you just come here under cashier. If you click here under cashier, you'll see so many deposits from wallets. You can also use your credit card. And the best thing about this, especially for those of you like using M-Pesa, if you go to deposit, you'll find even you have an M-Pesa option. You have you can use Skrill. You can also use something like okay. Let me first of all change to real account. First of all, you go to the real account to come to cashier. If you want to deposit, you can check here. These are all we have so many deposit methods from cryptos, from other wallets, and we have so many wallets that you can use. As I have explained, especially if you have Skrill, another one you can use, and the best one also you can use Perfect Money Skrill, and you can see everything: Binance Coin, Bitcoin, and all that, including all this M-Pesa. You can check Airtel is there, and including AstroPay. If you have it, again, it's one of the best. Like currently, we are using AstroPay, especially for withdrawals, one of the best. Rather than using, you can deposit. You can also connect your AstroPay and all the other deposit methods. It becomes one of the best. When it comes to withdrawals, we don't have any problem. So if you can do, especially to withdraw without using any agent, please, P2P is one of the best. So this is all you need to know about deriv.com. And the more you get engaged with this market, the more you become familiar, because you cannot just know by just maybe watching this video or going through the theory part. Again, it's good you dip yourself inside and get engaged in this market. That's how you can do to know about what the new things that, like, you can check. You already have new trading asset I didn't know by just checking on them. So that's how you do. You deal with this deriv.com. So that's all. So from STF Forex Hub, we'll meet in our next class, and the next one will be, maybe we may dip ourselves more into deriv.com, or the other class that we'll be having. So from STF Forex Hub, let's all continue to earn as we learn. Thank you, guys.